Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Good morning, everybody. Hold on, let me fix our layout here. Sorry for this. There we go. And then move my camera up. Boom. Good morning, everybody. Thank you for being here. Good afternoon, wherever you are in the world. Just real quick, can you guys hear me okay? All good on Robo says no audio. Can you guys hear me? Just want to make sure you can. Sometimes I have to swap out my mic. Just going to check this. I think we're good. Okay, cool. Tiger says he hears me. All right, cool. So hope everybody's doing well. I've got a trade I want to talk to you guys about. I don't talk about my options trading too often, but I want to talk about one because I got a bad one, a not so fun one, right? It's easy to talk about your winners. Let me tell you about one of my losers. Check out PayPal here this morning, down 17% on me. No fun, but let's talk about it. So I just want to say, on my YouTube channel, my M plus M strategy is definitely the top seller. It makes me sad sometimes because I love trading options. I love, my other strategies. But at the end of the day, this is a business. I'm a content creator. We have a show here. And it does sometimes make me sad that I can't really talk about the option stuff as much because when I do, it typically causes a fall off in viewership. People just are not as interested in it because it's such a boring, slow and steady approach to markets. But it's something I'm really passionate about and really love learning about. Anyways, I'm just going to do it anyways because I've got an interesting circumstance here that I wanted to showcase. I do my best on my channel, not to shy away from losing trades or things that I'm going through because I genuinely, I know what I'm doing with the markets. I have traded for a long time. I know my strategies very well. I accept the pros and cons of what I do. Nothing is impervious to drawdown or bad trades. So with that said, I sold a put on PayPal. The ticker symbol is PYPL. And so if we take a look at PayPal, you can see this morning, they had 2 things that really rocked the boat. Number one, they're changing out the CEO. They're firing and replacing the CEO that was in the chair, which the market is a little concerned about. I guess the new guy, maybe that's a piece of it. Maybe it's also just, the board not being happy is a red flag. So anyways, the stock dropped hard. Also, the earnings report that came out this morning was a bit lackluster. If we just take a look, they missed on top and bottom line. And what has happened? Well, over here, I sold puts on the stock. Now, if you don't know what selling puts are bearish bets. You can actually sell bearish bets. You can sell that bet to someone else. Whoever bought this bet from me is happy they did because they bought a put betting that PayPal would fall. I sold a put betting that I didn't think it would fall as far as it would or as far as it did. So just as a bit of what do I do in this circumstance? Well, when you sell a put, a cash secured put, CSP, a cash secured put means I am signing up and willing to buy 100 shares per contract sold of PayPal at the agreed upon strike price, $51. Okay. So what does that mean? Well, it stinks because I now have to buy shares of 50 at 51 and the share price is now 43. So that means I immediately will have an unrealized loss when I get assigned into this position minus like $8 per share on the, I believe I did 1,000 shares. So yes, that is an $8,000 no fun drawdown that just slammed me here today. So I show you this because I show you guys when I have big wins. I'll also tell you when I have not so fun losses. But $8,000 is a lot of money, don't get me wrong, but on the account, it's not going to devastate anything. I'm working on a larger capital basis that I've built up over the course of 10 years. $8,000 is not going to break anything. But at the end of the day, this is part of the process. So if I'm looking at this, right, so I get assigned, what will I do? Well, if I get assigned the shares, which I think that there is some expiration, some time to expiration on these puts that I sold. Let me see if I can just share this really quick. So here was me breaking it down this morning. So I sold the puts for $1.12, which doesn't help too much given that the stock dropped by what? $9. So I have a cushion slightly of $1.12. But anyways, this is why I don't talk too much about options on my channel. It just doesn't hit with the audience as well usually. I understand some people really like options. I really like options. But yeah, I'll probably reserve that more for my secondary YouTube channel. And I'll probably make another video talking a little bit about my situation on how I'm going to deal with this and how I'm going to repair the trade to at least come out maybe break even or try to work in, hey, I could take assignment on these shares. I like the company and I think we could have a rebound over time and I can repair and ultimately make money on the position. Anyways, let's take a look at some stuff here on the more on focus stuff here on this channel. We'll take a look at the S&P 500, just shy of all-time highs. Looks really strong here, at least from a price action perspective. We have seen a nice rebound here in share price from that 68.50 level. Price holding support and looking potentially like it wants to break to new highs. However, you do have some catalysts for the stock market. You have some catalysts here for the stock market, which could be, of course, earnings. I believe we have Amazon and we have Google this week. So you have some really big names reporting their earnings, which could cause the stock market to, again, either move higher or lower, depending on how those earnings reports come out. Sometimes people, if you trade indices, they don't kind of take credence or enough focus on the earnings reports for the major corporations in the US stock market. It is pretty critical. Because if you have strong earnings, that's the fundamental, kind of driver long-term of stocks. Now, earnings are impacted by many things. One of the big ones being the economy, right? If you have an economy that is healthy, growing, that should trickle into earnings growth. If you have strong GDP, which is part of the reason why earnings have been expected and been delivering strong for the US stock market. We've had really solid GDP growth. We also had really solid manufacturing PMIs. Did you guys see this? This is very solid. The economic growth, it's weird because you're like, how can we have a lull in the jobs market, but at the same time, the economic growth of the US economy is still rock star. Take a look at manufacturing PMIs, right? Let's look at that. Economic data, economic growth, manufacturing PMIs. Look at that. You had a banger report from the ISM Manufacturing's PMI data February 2nd, so yesterday. Huge beat, and it's in positive territory. Remember, growth in manufacturing in the index here is contributed above 50. If you get above 50, you have growth. If you get below 50, you got decline. We've been stuck in decline for the better half of the last 5 years. So to have a solid manufacturing pickup here is encouraging for the U.S. economy. And so people wonder, how can you have a weak jobs market while also seeing such strong growth? It's weird, but perhaps you could attribute some of it, a lot of it over time to corporations becoming more and more efficient per employee. We've seen this on a local level within our own team here at A1 Trading. Without having to grow our staff dramatically, we've been able to do more and more through the help of AI. It's a very real thing. I can feel it locally. I'm a small business owner. There's about 10 of us in everything that goes on behind the scenes here. We've got 5 of us in office, 5 people, remote that do stuff in regards to A1 trading. So with all that said, the amount of stuff that we are able to do over the years has skyrocketed. AI has been a game changer. All these wonderful software tools help us to do so much. I'll give you a quick example. We started using CapCut, if anybody is familiar with CapCut, to help edit some of our social media clips, like short form content. And by doing that, James, the producer behind the scenes, he's able to knock out a good clip for social media within an hour and a half. Like, whereas that used to take us a lot longer to do that. So the efficiency of corporations is getting better. And so you can kind of look at that and you can say, oh, well, doesn't that mean employers don't need as many people? And I would say in the short term, yes. In the short term, that is the reality. Long term, here's my opinion on it. Not that it matters too much for trading the markets today, but long term, I actually think that this improved efficiency could lead us into some sort of super cycle of growth that does ultimately lead to new industries being built, new projects, new things that we don't even know about that are going to demand more hiring, automation, AI. All of these things are game changers for efficiency for companies. And so a lot of people are scared by that idea. They're like, well, that's going to kill jobs. Maybe in the short term, but you're being, in my opinion, too pessimistic about it. That efficiency has also allowed A1 trading to do a ton more stuff. We do more than we've ever done in the past on, a team of people that has not necessarily grown dramatically. We have grown. We've added a couple team members over time, mostly on the international side of things. But it's not like our output has grown dramatically and our team size has grown slightly. Anyways, just a thought, in terms of how this is possible, where you have this efficiency and economic growth that's not necessarily spilling over in the short run in massive hiring. So is it a long-term kind of problem? Yeah, kind of. If the economy keeps, growing in terms of its output, but it's not being felt by the consumer in the form of jobs, if people are not getting jobs, if that jobs data does not start to improve, eventually that does cause problems. So we want to see jobs growth and efficiency. That's the dream, right? You want to see inflation stay under control, the jobs market rebound, economic growth boom. That could lead to a strong hiring market where you get more competitive wages for people over time. So anyways, how does that equate to the S&P 500, the NASDAQ? Well, they love this. Less need for people, more efficiency per person. That's just straight up profit margin expansion for major corporations. So yes, I mean, big picture, I still think that the stock market has upside. Do I think that it's a bargain at these levels? Personally, no. And I've also mentioned that there are some worries about the jobs market. That is a concern for me. We're getting a very bearish reading with the jobs market here currently. We were going to have NFP. That, by the way, update if you haven't heard this news, the BLS has delayed the Friday NFP report due to the partial government shutdown. They have decided to postpone it. I haven't looked at it, but I imagine it's probably 1 week delayed. So kind of a bummer. I was really hoping to see that NFP report. So that kind of leaves me in the camp of, well, we're not going to get this data and we're not going to get this data this week. So are we going to get anything else? Well, are we going to get jobs claims today? I think we are. No, we're not. Interesting. U.S. government data may be impacted by the shutdown. So we have ISM services PMIs tomorrow. We have ADP still on schedule for tomorrow. So yeah, we were going to have a Friday NFP report. Unfortunately, we're not due to the delay. So where does that leave me? Well, I'm still neutral on stocks. I'm still, when it comes to gold and silver, we haven't even talked about them yet. Oh my gosh, I've left you guys hanging for gold and silver bugs out there. Yeah, this is a very sharp rebound today. Love the rebound here. It's good to see that this isn't going to just waterfall back through the lows. Precious metals here finding some strength, at least on the silver price action above 70. So 70, 72 here seems to, at least for now, be holding as support. If we draw some longer term fibs, let's get on a weekly chart for just a second. If we draw some weekly level Fibonacci retracements, is this a 618% retracement? It is. So you've got a longer term level of support here. We also, I imagine, tagged into some key moving averages on silver for the first time. I bet you we hit some moving averages we haven't seen in a while. Yeah. So it's a 50-day moving average. You have the 50-day moving average. You have support here holding from a technical perspective, not considering macro or anything else for just a second. This is a very logical place for a bounce. Now, whether this bounce converts into a follow-through upside move is where I would probably be a little bit doubtful or cautious. I'm not bearish on precious metals. In fact, I will show you what I am based on Edgefinder's reading. So if I take a look at silver, it's actually leaning slightly negative here for the overall reading within Edgefinder. The technical read has flipped more bearish here with the 4-hour and daily chart trend snapping to the downside. I agree with that. I think that the daily and 4-hour, like if you're looking at the 4-hour chart, that's no longer a solid, clear upward trend, right? This was a clear upward trend. When you broke that structure, the 4-hour and daily time frame, when we look at silver, it looks very both directional. I have no idea where, based on this chart, like I like to see higher lows, higher highs. I like to see clear demand every time you get a dip come into this market. That candle was so devastating, so dramatic, that I think it snapped the clear and easy uptrend. I know this is hindsight speaking, but I genuinely feel this way and would have said this back here and back here and back here. I think that the easy money in precious metals for now is behind us. If we go into a cycle where we start to see higher lows, higher highs, and we start to repair this upward trend, look, we might have that opportunity to start looking for a constructive rebound. But if I'm looking at this from a technical perspective, I think that clear and obvious upward momentum has snapped to the downside, and I would cautiously start to look at this with a Fibonacci retracement and say, okay, how much room do we have to the upside? If we see a squeeze up 38.2, 50% retracement, that's where I start seeing, okay, if sellers would take it lower, if this is sort of a rebound before the leg lower, I would imagine this 38.2 to 50% retracement is probably where you see, some downside. Nick's always too cautious. I like that. I've been doing this a long time, man. If you are ever certain, where a market's going to go, guess what? You aren't actually. We never know with certainty where markets are going to go. The sooner you can accept that, the sooner you'll make it to the promised land. Okay. Good trading is all educated guesses, probabilities, stacking macro, stacking technicals, and making an educated guess with a small risk per trade. That is it, right? There's nothing beyond that. If you're seeing huge swings in your account, you're doing it wrong. It's really that easy. If you see big swings in your account all the time, you aren't trading. You're gambling, because even a good system with an edge can be destroyed if you risk inappropriately. My cat is having a fight with the outdoor cat. Not actually. They're just meowing at each other outside of the window. I don't know if you guys can hear that. Anyways, what's up, Austin? Good to see you in the chat. Congrats on the gold trade. Personally, I believe we'll range bound for the next 3 to 5 months on gold. See, that's kind of how I'm feeling too with it. If I'm looking at, we looked at silver, let's also look at gold. Gold completely getting a -1 score, so that's just not a strong reading one way or the other. Let's just break down the economics for just a second, because this is where a lot of the root cause of me being neutral on precious metals is going to come from. So the economic growth here recently out of the U.S., the dollar's been strong, and I think it's valid. So this is equating to a bearish lean on gold. So if I take a look at like GDP growth came in better than expected, so that's a positive surprise for the U.S. dollar. That is bearish for gold. If we take a look at manufacturing PMIs, I don't know if you guys saw that. We talked about it earlier in the stream. Rockstar manufacturing PMIs beat forecasts significantly. If we take a look at services PMIs, we do have new data for this coming up on Thursday or Wednesday, one of those days, might be tomorrow. We had a positive surprise for the US dollar. That was bullish USD. Retail sales better than expected. That's bullish USD. So consumer confidence did come in weak. So that's bullish for gold. On the economic growth category, we have a nice summary of a very bearish read. Okay, what about inflation data? And what did I do here to mess this up? I don't know what happened right there. That's totally weird. I've never seen that before. I might just need to refresh the page. Anyways, I'm going to do it really quick before we move on. PPI, right? 3% came in higher than expected last Friday. It also coincided with the big drop day. I don't think that that was coincidental. I think that that was part of the reason the market dropped so hard for gold and silver. You had the producer price index come in hot, right? That was a bearish catalyst for gold, bullish catalyst for dollar. You had the Fed chair selection of Kevin Warsh, right? Perceived as potentially more hawkish than who they may have, who the market thought they might have put in there, Rick Reeder or Kevin Hassett, right? So those were more dovish picks that were expected. We got somebody who's still slightly dovish, at least in their rhetoric, but not nearly as dovish as perhaps the market had expected. 2-year yields also been spiking up. So these things are causing a inflation bias that is more bearish for gold. At the jobs market level, however, that's where you've got a solid score for gold, right? NFP, the latest, came in weaker than expected for the U.S. It's weak dollar, strong gold. Jobless claims, right? Jobless claims came in slightly higher than expected. That is weak dollar, bullish gold. ADP, bullish gold. JOLTS jobs, bullish gold, right? We're just doing our checklist items that we do to build a bias. And so at the summary of everything we just got done discussing, you've got economic growth that looks solid for the dollar and jobs market data that looks weak for the dollar. What does that leave you with? Kind of a neutral read. So when I look at gold and silver, I think it's very logical that we're getting a bounce from such a steep drop-off. But I have sort of a mixed opinion on where I think it goes from here. I don't really see a dramatic blowout through the top unless you have something insane happen in the world. And I also don't see a dramatic crash from here. So I would actually lean with the Edge Finder's view of neutral, meaning we could probably just swing back and forth here and maybe just chill out and see if we can see gold volatility drop as time passes, which is starting to happen. GVZ, I think you guys should add this. If you trade gold, 100% you should look at this. This gives you, it's similar to the VIX for the S&P 500, which gives you an idea of expected or implied volatility through the options market for the S&P 500, but this one is for gold. And so traders love this sort of stuff because it gives you an idea of how volatile gold is expected to be by the options market pricing. Speaking of options market pricing, there we go, that fixed it. I wanted to see what the put call ratio, if we had any interesting data come in from the latest, CBOE, the options stuff going on. And I don't know what's going on with Edge Finder. It's just acting slow this morning. If I take a look at gold, latest one came in pretty neutral. So again, not too extreme. Now there's a lot of volume going on in the options world, but it seems like it's kind of a mixed bag in terms of which direction it's going. There's a lot of bulls, there's a lot of bears. Silver, I imagine, is going to probably be the same. Yeah, silver, pretty smack dab in the middle. Bitcoin, ooh, interesting. Crowd sentiment getting real bearish on Bitcoin. We track IBIT, that's the ETF data that we track for Edge Finder's put call ratio for Bitcoin. So crowd sentiment's getting really pessimistic on Bitcoin. That tells me that I wouldn't love the short side here, just because crowd sentiment is so extreme to the bearish side, right? So a high put call ratio, what does that mean? That tells me that crowd sentiment is out there aggressively hitting the put side, right? They're buying puts, they're betting big against Bitcoin. And so, you know, I don't have a really strong reading overall on Bitcoin within Edgefinder currently, but I do find it interesting, and that would make me a little cautious. So I think if you're on the short side, my opinion is we might actually see a bounce here rather than some sort of flood through the lows. Could happen, but I don't have enough conviction there. Morning, Nick. Do you have a video with even more in-depth example of how you use Edgefinder to build a bias like you did just now? Lano, yes, I do. And I might be able to grab it for you. I might have this saved. Vid links. Hold on. Edgefinder. I have a whole playlist. This might be what you're looking for. If I remember correctly, when we were building this playlist, the first video that's like highlighted at the top of this playlist, I think is a how to find trades with Edgefinder video. Edgefinder is an absolute game changer, but let me tell you what it's not. It's not for somebody who is looking for a copy paste signal system. It's not going to do that for you. It's for traders who take this stuff really seriously and who want to have this data at their fingertips. If you're a trader, you shouldn't be flipping through 37 websites every morning trying to snag a look at what the put call ratio did, or looking at, reading an article about who said what. Like, I think this is why we built the tool in the first place. I used to do that stuff. I know what it's like to be a macro trader without proper tools, and also not wanting to spend $2,300 a month on the Bloomberg terminal or whatever it costs. It's over $2,000 a month to get a Bloomberg terminal to access a bunch of the data that we have built for not even a fraction of the cost. Our software tools, they're not cheap. And I will never say, oh yeah, no, it's a cheap purchase. No, it's not. It's an expensive tool. But your alternatives are far more expensive. The Bloomberg terminal is over $2,000 per month per license. We don't charge anywhere near that. Not even remotely close. I set out to build this tool in 2021 because I'm a macro trader. I wanted these tools in front of me, and fellow macro traders helped me to build it. I have friends in the trading space who are also macro traders who I have taken so much of their time to ask them how to build the right tool for the average macro trader. This is not some sort of black box algorithm. It is very transparently data that you can find all over the internet for free. But what we have done, what we have built here, is a all-encompassing, all-in-the-box, one-spot shop for serious macro traders that don't want to spend $2,300 a month on the Bloomberg terminal to access a powerful tool set to scan this stuff for yourself. If you want to try it, if you don't mind, James, if you could drop the link for people to try out the Edgefinder here. We do have a trial system, and it comes with two things. I am very, very confident that if you try out the software and start spending some time with it, you will never trade without it again. We have thousands of people who access the software every month from all around the world. If you don't have the tool, try it out. But what also comes with this, if you fill out that form, it will instantaneously send you completely for free the Edgefinder how-to course. It is a full course on how to trade with Edgefinder, up and down how the software works. And I would ask you, before you ever consider purchasing the software, spend a couple days, spend a week if you need to, go through that course. This is something we have been building for the last 5 years. We have spent a tremendous amount of time building the tool that is here, and it has a wealth of resources for traders to build better confidence in what they do in the markets. Get yourself a copy, but before you do, learn it, explore it. There's nothing magical or black box here. It is just macro made simple. And again, macro is the stuff that if you turn on CNBC, Bloomberg, Fox, whatever, turn on your favorite financial media where they're, debating markets or talking about markets or commenting on them. They're not talking about a head and shoulders pattern. They're talking about macro fundamentals, monetary policy, business cycles, financials, if you're talking stocks, right? They don't spend all day long looking for some sort of smart money concept, candlestick reversal pattern. That's not what they're doing. Listen to the pros and you will hear them talking about the Fed, business strength across the economy, thematic catalysts like AI. They will talk about whether that is slowing, whether it is accelerating. They will talk about the economy, GDP growth, the jobs market, inflation statistics. We build tools that help you gaze into that stuff without a PhD in economics. That's why we've got customers all over the world that use our stuff. With that said, we have got a very special guest taking over the stream here in just a second. He's back for another one. Tiger Barry. I would highly encourage, by the way, he's got some great content and live streams that I think you guys should check out for yourself. We'll make sure to drop the links to his stuff here as he's going. But real quick, we'll play a quick ad break. And then up next, we have Tiger Barry taking over the stream. Stay tuned. Hey, stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream.
All right. What's going on, everybody? Happy Tuesday. I can echo and vouch for everything Nick just said about the Edge Finder, guys. This thing has been a dream. And just to piggyback on what he said about the, as far as checking out some videos beforehand, if you just go to a1trading.com, right here on the Edge Finder link, there's a tutorials button. If you just click on that, scroll down, you'll start to see some of his videos kind of explaining it, just to give you something to at least check out in the meantime until you get your copy. There's some more further down and things like that. So definitely go check that out. It's been the best decision of my trading career. Okay, I've been doing this for 12 years now. I finally got this a year ago. Well, just under a year ago. I guess it's been about 10 months at this point. But everything's changed. I was $9,000 in the hole on my challenge, my challenge account. And I successfully used this to kind of navigate and bring myself back over the hump. And that's with me just risking 0.2%, guys. I don't risk a whole lot on my trade. So it can definitely be done. I'm a living testimonial of this Edge Finder. Get it the second you can. It's going to help. So as far as what I'm in today, guys, I'm in an Aussie dollar, US dollar long position. I got into this Sunday evening when the market opened up here in the States. The Edge Finder was given a reading at that time of a +7, but it's now down to a +5. So still a bullish score, not as bullish as I would like it to be. But something that's really cool about the Edge Finder is if you go to the top setups history that he has on here, and you can click on whatever asset you're looking for. Something I like to look at is the run up or the run down of the kind of the trend of these scores. So obviously, guys, back here when price is just beginning to become a 5, this is what I like to see. I like to see that incline in the prices. Okay, it's just one little way I like to use it as well to see if this is trending up or trending down. And as you can see, when I got into this trade, again, it was a 7 on February 1st. It's actually trending down. So this is not what I like to see. But does this mean I want to get out of that trade? Absolutely not, because I still stand by the analysis of it. Australia obviously is one of the stronger currencies. If we're taking a look at the surprise index, it was up there at the top spot, but it's now been passed over by the Kiwi. Okay, the Kiwi is now the leader, but the Aussie is still a respectable 2/3. Exceeds expectations on their reports, so it's still strong. Now, the dollar is pretty much right behind it at a 63%, so they're pretty well even at this point. Again, this was up in the 80s when I got into this trade. So what did we have in the last 24 hours? Well, we had a cash rate statement for the Aussies. Okay. Now, to start with, yesterday, I was feeling a little bit uneasy about this trade because the manufacturing PMI data for the U.S. had come out. Now, keep in mind, this was in a contraction territory at first. It was 47.9. Anything under 50 is contraction. Anything over 50 is expansion type territory. Okay. So this goes from a 47.9 to a 52.6. So it goes from contraction to expansion. Okay. So that's one thing going against my trade narrative. Do I want to get out of that trade? No, absolutely not. I stand by the demand zone that I bought it on. And also, guys, I knew that we had the Australia's cash rate statement coming out last night. Now, it was at a 3.6. They did raise by 25 basis points for the first time, I think, in a couple of years, if I checked that right. So, obviously good for the Aussie. I had a decision to make, though, when I was in this trade yesterday prior to the 9:30 p.m. my time release of this report. Do I want to get out? Do I want to stay in? Right? If you're a newer trader, probably a good idea to get out. But I felt like I had a pretty good reason to stay in this, right? So, but yeah, then obviously we did have it, meet the expectation, 3.85%. And kind of funny, kind of ironically, looking at the carry trade meter, the carry trade scanner on this thing, when I got into this trade, I was actually paying a swap fee. Okay, Aussie dollar was, obviously less. I was buying the Aussie over the US dollar. So the Aussie dollar was a 3.6 and the US dollar, of course, is a 3.75. So paying that swap. But then when they changed the rates, now all of a sudden I'm getting paid the swap. So it's kind of fun. It's kind of ironic how that changed in the middle of my trade. Just taking a look at it. Now, anytime you see blue on this, that means if you're a longer term trader, you probably want to be trading in the direction of the swaps, right? So where is Aussie dollar? It's on here somewhere. Aussie, there it is down here. See, this was red the other day when I got in this trade because I was paying the 0.15% swap. Now I'm getting paid 0.1% swap. Okay. Not that big a deal. I'm not in trades a long time anyway, usually a day to 4 days, something like that. But I just thought it was interesting to kind of point out. But when it comes to the trade itself, okay, just looking over here at the Aussie dollar pair, let's get rid of my moving averages real quick. Basically, what I was looking at from a top down is, okay, where's my daily trend? It's up. It's up, right? Daily trend's up. Drop down to a 4 hour. Okay. I was looking initially at this 4 hour candle right here because it was inside of a daily. This kind of lighter yellow zone over here. Okay. That was my daily demand zone. If I go back to a daily, it's this indecision candle right here before the strong move up, which obviously left our gap, our acceleration gap, runaway gap, fair value gap, whatever you want to call it, right? So that's really the basis from the start of my trade. It's also coincidentally in a 38.2 retracement for you fib traders out there. Now, I don't use fibs to make buying or selling decisions, but I do use fibs to see where the retail crowd might be getting in, where the liquidity might be getting in, okay? Because you tend to know where their stop losses are. Try to think like a bank, right? I try not to look at the charts through the lens of a retail trader. I try to look at it as, through the view of a bank, because they're looking for liquidity, guys. They're looking to accumulate and distribute their positions, and they have to find those pockets. So anyway, daily, okay, flip on down to the 4 hour. Got our 4 hour candle here. It's going to be that green candle there. We had 3 consecutive green candles up after this basing action. So I got to see what happens when price returns. Now price returns and ended up getting into the trade down here at this area here. And then as you can see, we're going up. Now that Aussie dollar rate increase, that 25 basis point hike, only helped my trade. If I actually go over here to the trade itself on my other platform, I actually drilled down even further into this 1 hour demand zone, this 1 hour candle here before the strong move up, which also represents the origin of the strong move up. Okay, if I'm just kind of isolating to this smaller time frame, price comes down, wicks in beautifully. I get into the trade. We kind of formed this double top action here. Where did I start to really feel good about this trade? It wasn't until we had a break and a close on this candle here above this double top. That's where I start to relax and be like, okay, I got my break of structure to the upside. At this point, it can retrace all at once. I feel pretty good about it. It's now formed a new impulse leg. Impulse legs is always what I like to find my supply and demand zones from. Okay. Impulse legs tend to produce some pretty good supply and demand zones. So by breaking that structure, that means we have a new impulse leg. So when we broke that, feel pretty good about it. And as you can see, guys, right here is the Aussie release right here on this big expanded range candle up, which produced a gap all on its own. So I've got to take profit, not a take profit, a profit target, because there is a difference, guys. There's a difference between a take profit and a profit target. What the heck is that? Well, take profit is where you're going to get out of the trade. You set your take profit, like I have up here, with the expectation of getting out of the trade. But I just kind of throw that up there and start looking a lot like Nick does, actually, just trail stopping along the way. Because once price starts getting up into this area, I'll probably just end up kicking the can down the road, so to speak, and see if we can't latch onto a home run. So then I just kind of choke it out from the bottom side with the take profit along the way. Swing low here, swing low here if we're looking at this demand zone, and then ultimately swing low here the higher we get. So that's a profit target, but it's not a take profit. But I also have to be aware, guys, of this 1 hour supply zone. Yeah, Joey, my strategy, daily and 4 hour supply and demand zones. I try to look for confluence, just to answer your question on there. I'm trying, my whole goal in life is to look for unfilled orders. Where did a bank, where did a whale, where did the smart money start a consolidation only to see price move away, meaning the demand heavily exceeded supply or vice versa? And how many candles was in that consolidation? If I only have 1, 2, 3 candles in a basing action like this, is that giving the banks enough time to accumulate all their position? Probably not. Now, something like over here, look at this. That's a demand zone candle, is it not? We had big green candles coming out. But look at all the time the banks had to accumulate the position in that same price zone. That's a long time. That's a long time. So my goal in life, just to kind of answer your question, is where can I find a consolidation point that was there for a very small amount of time? Because if a bank is, or a whale is accumulating position here, they didn't have much time to potentially fulfill their whole order. Remember, they're putting in $100,000 orders, $1 million orders, multi-million-dollar orders, potentially at some of these higher time frame swing points. So my whole goal is look for the consolidations that are only 1 to 3 candles like this, and then wait for the retracement, because that tends to be where they like to fulfill the rest of their order. Okay. So this right here on yes, it's a 1 hour time frame, but this actually presents another demand zone right here. Now I'm in this trade already, so I personally wouldn't be getting into it. But if I were not in this trade, I would honestly feel pretty comfortable about getting into this trade again right here. The reason is, and then again, I've got this supply zone, so I have to be aware of it, because that's a sharp drop with a big candle, with a big, volume candle. Now, we don't have centralized volume in currencies, so we have to look at other sources, kind of cheat the system, so to speak. So that's why I personally like to use volume spread analysis, so that I can find these big candles here, these institutional candles. In other words, a ton of activity in that candle, ultra high volume, what they call, okay? But just going back to my example over here, I have the benefit of knowing that price hit the demand zone and is now making a move up and then breaking structures left and right. New impulse candle. So the goal is, just to kind of finish the thought on that question, where do I get in? Which demand zone do I get in? Well, I want to get in at as close as I can to the origin of the overall strong move up. And that would obviously be down here. But I want my supply and demand zones to form on their own, not as a result of bouncing into another demand zone or supply zone. So this demand zone while it looks nice and it's got a gap above it, it was formed from bouncing off of another zone. The reason I like this demand zone is because it created itself. It's just out here in la la land where this double top action was, kind of consolidating and creating itself. And then we get that big expanded range candle away. So at this point, like I drew up, I'd be looking for a retracement here. Because this candle, if this candle had formed on its own down here, in other words, over here, you just got like a, a big strong move up or down. This would be my favorite candle because it's the closest to it is the origin of the overall strong move up. If we're just isolating this, this new impulse movement, impulse candle. Remember, the impulse breaks the structure. In this case, a double top. It ended up breaking this structure right here as well. It came all the way up to another supply zone. And then what happened? Bounced back, right? Is this not a supply zone right here? That's another supply zone on a smaller time frame. But now you see we're getting a reaction from it. So price loves bouncing back and forth between supply and demand zones. It's like a game of ping pong. But the whole goal in life is to go for the extreme ones, not go for the ones in the middle. I don't want to diddle in the middle. I don't want to play around in the chop zone because I get chopped to pieces. So I try to go to the origin of the strong move. But when this zone is created from bouncing off of another zone, then I want to pretty much kind of ignore that. I'll still keep an eye on it, but my favorite spot to buy in is here. Why not down anywhere through here? Well, because all of these other all these other candles are overlapping candles or wicks to the left and to the right. I have to find an inefficiency in the market. Gaps like to be closed, do they not? They don't always get closed immediately, but as price tends to return, gaps like to get filled. And then the banks, the whales, the institutions, the hedge funds, they like to find the unfilled orders just on the other side of that. So for me, this is the top demand zone that I'll actually be watching this. I'll probably get it. I got a brand new, another brand new funded account. So if price comes back, I'll probably go ahead and be hopping into this trade on that other account. But I'm already in this on, my two main accounts that I use, my two main challenge accounts. So, yeah, I've already moved my stop loss to break even. I've moved it under this swing low here. We're bouncing into this supply zone. So here's the thing. Once we break that, assuming we can break this structure here and close above it, well, then I may look to start slowly moving my stop loss. Perhaps I'll move it and just leave it underneath this demand zone right here. If we start breaking these structures up here, again, I'm going to kick that profit target up higher. But then I can move my stop loss from here to under here and just keep going. You just keep chasing it down. Lock in gains along the way, especially if you're newer. It's just good to kind of teach, and it's nice to be able to feel the feeling of some small wins just so that it helps build your confidence. It's a big thing, right? Because otherwise what could happen? Price could come all the way back and stop you out for a needless stop loss or a needless small loss, right? So that's my deal on Aussie dollar. Let's see here. And as far as the top setups go, I'm just kind of keeping an eye really on the most bullish pairs right now, the very bullish ones up here. Now, I'm already in an Aussie pair, an Aussie currency pair. So because I've got a regular position on the one I'm in, I don't know that I want to be getting into another Aussie pair like the Aussie yen or Aussie Swiss, but I'm definitely interested in Kiwi yen, Kiwi Swiss, because the Swiss franc is the weakest currency when it comes to the fundamental analysis, missing expectations on everything, literally. I think the Swiss did bump up to a 33%, but it was sitting there at a 0% for the last few weeks, something like that. Yeah, Swiss franc. So it's 33% now. And the Japanese yen is the second weakest. So there's your two weakest currencies. Is it a surprise at all that those two are paired together on the most bullish, assets, most bullish pairs? So I personally am interested in Kiwi yen, Kiwi Swiss. So let's just take a quick look at that. Gold and silver. Yeah, I kind of agree with the crowd, guys. They're talking about going, basing and going sideways for a while. I kind of tend to agree with that. If you're looking at demand zones, I was keeping an eye on this gold demand zone down here because we had a really strong push away. And we had the benefit of knowing that we had a former resistance point going through it. So at first I was looking at this. Look at this. So this candle, and I had a 4-hour demand zone inside of here. I think the trade's already done. Because if we kind of scroll back in time to that 4-hour demand zone I was keeping an eye on, look at that. We just beautifully dropped into that 4-hour demand zone, which is confluence because it's inside of that daily. And then we got the move away. Now, I personally didn't have the balls to be getting into this trade because it was neutral. It's neutral score right now. Neutral score on the edge finder. But demand zone traders that have balls, they probably got into this trade and made a nice 6-1, 7-1, 8-1. Just not me because it's trending downwards at that point. But yeah, from a higher time frame perspective, when in doubt, zoom out, guys. You guys know gold and silver. Nick talks about it ad nauseum, and he should, because this thing's just been going up and up and up. We haven't broken any major higher time frame structures to the downside yet. There's your January candle right there. We're nowhere near it. Well, we are kind of near it, but we've got a rejection. We move back up. So as far as I'm concerned, it's still an uptrend. That's not giving a bullish signal. So if I were to want to get into a gold or silver trade, I quite honestly would probably prefer to start seeing some 4-hour or higher highs and higher lows, but we just don't have that. You know, if we can start getting some price action, something like this, start having a series of higher highs and higher lows, okay, right? Then that might be a potential reason to, from a technical aspect, to potentially find a long position. Does anybody want to short gold right now with this move going on, this higher time frame move? Heck no. But if I start seeing a series of higher highs and higher lows, potentially from a technical aspect, but if and only if it matches up with the fundamental and sentiment analysis, guys. JOLTS figures? Yeah, I don't know about that. I don't think so. I think the JOLTS, let's see here, Tuesday. Yeah, we don't even have that one on our list. When is JOLTS coming out? I think JOLTS is supposed to be, if it comes out, period. Yeah, I don't even see it on here. Must have moved it. But as far as today goes, guys, the main high impact event is the Kiwi employment numbers. I'm pretty sure that their government's not shut down partially like ours, so we should get that. Now, I would obviously like to see this come out the way it's projected, because they do a previous on the employment change. Okay, previous was a 0. They're projecting a 0.3. Now, this would just very slightly, indirectly, potentially help out my Aussie dollar long trade. Okay. Their cousins, their neighbors, Australia, New Zealand. When one catches a cold, sometimes the other does. Okay, so it's not that strong of a reason to be buying it, but I would just like to see this come out at least meeting expectations, if not exceeding it, just to kind of potentially help out the Aussie bucks. So anyway, that's the only main thing to worry about today. I'm also interested, even though it's a yellow folder, a low impact event, I personally am interested to see what Governor Jones talks about tonight, just to see what kind of lip flapping session they have, to see if he says anything stupid or supportive of my trade, Aussie long. I plan to stay in this trade until the end of the week. I just don't have the balls right now to be holding a trade over the weekend. The last time I did that, the last 2 times I did that, I actually got lucky and won. Well, why am I worried about it then? Because just as easy as those prices gapped up in my favor, they could have very easily gapped the opposite way. Gap beyond the stop losses, close out for an even bigger loss than I should have taken. So the last time I held a trade open was when the U.S. dropped the bombs in Iran to blow up the nuclear facilities. That was the last time, because prices opened up the Sunday after, gapped in my favor, and I should be excited, but I'm like, oh, wait a minute. I don't know if I want to be doing that right now. Euro dollar, let's take a quick look at that. Sataroof, we'll take a look at that. Euro dollar is neutral. Okay, so I'm not really getting a bullish reason to be trading this. If I go to my neutrals, Euro dollar neutral 1. So that's about as neutral as it gets. You're getting a very slight bump from a technical perspective, but you're not getting anything from the COT report, the retail sentiment, or obviously the fundamentals. But we can take a look at that. Let's take a look at that from a technical perspective. Okay. Getting a big retracement. Our current impulse leg is obviously starting down here and ending up here. We broke this structure. So this is my current impulse leg. This is where there's strength, higher time frame strength. Well, the easy spot to see, or your eyes are to be drawn to, is that one red candle right here on a daily time frame. Okay. Obviously, there's a demand zone all the way at the bottom as well. It's not that big of a gap, though. But if we kind of isolate into this area here, let me turn my drawings on. Okay. You can see I kind of drew up this daily demand. I just keep it out of the way. And now I'm focused on this smaller time frame within, which is a 4-hour. Look at this. So this is a 4-hour demand zone inside of a daily demand zone. That's my favorite confluence. So the real easy answer is, let's get some unfilled order action going on down here to potentially push price up. Again, if we're just isolating the technicals. I love the fact that we had a acceleration gap coming out of it, which is that little white box right there, the top of the proximal line of the consolidation to the bottom of the second candle. Remember, we always want to ignore the leg out. Okay, that's because that's proof. That's proof that demand heavily exceeded supply. This is proof that there's potential reason to get into a trade down here, because it's probably going to be some leftover orders, right? Leftover unfilled orders. And then we just simply go to the second candle, the bottom of the second candle. This is our fair value gap. Now, a lot of people like to trade fair value gaps. Okay. And perhaps they work, perhaps they don't work sometimes on smaller time frames. Bigger time frames, though, now you're playing into the bank's hands. Now you're playing into the territory that the banks know well, the institutions. They care about unfilled orders. They have to fill their orders. They're big, gigantic orders. So are they going to be buying from a gap? Probably not. They're probably going to be looking for the demand zone itself, which is where those unfilled orders are chilling. Okay. So technicals, yeah, really like that spot. I don't know, just for kicks, let's see where our fibs are at. A fibs, yeah, so it looks like a little below the 61 level. And then ultimately, my favorite spot, if I were to buy this from the technical, is the origin of the overall strong move up. But that's a long ways away. I could see that point right there potentially hitting with a 1.175 level. Pretty nice round number if we're looking at the 50s, you know, the fives and the ones, or fives and zeros, right? 50, 1.1750. So that's a potential spot to look at. But here's the trick, and I'll end it on this, guys. Whenever you have price drop into, whether it's a supply or demand zone, whether it's a support resistance line, whatever the case is, if I have a demand zone right here, just to use as an example, okay, if I have a zone like this, when price comes down, it's in a very temporary downtrend. It's a counter trend, is it not? So how do I know when to pull the trigger? Do I just pull on a limit order? Yeah, you can if your research says it's a good idea. But if you're not, or if you're unsure, or if the zone is out of the discount zone, which is the bottom of the curve, close to the origin of the strong move, look for something like this. When price enters your zone, does it now break a structure? There's our structure point. And then from there, you have created a brand new impulse leg on a smaller time frame. This is an impulse leg because it broke this structure right here. So now look for a newly formed demand zone somewhere in here for your potential buy, because now here's what you got. New demand zone, okay? And you have broken the structure right here. Right? There's your turn that alert off. That is a very simple way, because here's the thing. Price could very easily, yes, run off and leave, and then you miss the trade, but you haven't lost anything. Or price cannot break a structure to the upside and go down and take you out for a small loss. That's your two choices. But at least if you guys do this and you see that it's at least trying to change and go the other way after bouncing into some demand or support or whatever the case is, that's going to give you a little bit more of confidence in saying, okay, I kind of think I should probably trust this trade. And then you just look for a new demand zone created on this impulse leg like this. And right there is your order. Bam. Right. That's your order. Okay. So that's it, guys. That was a quick half an hour for me. I do appreciate your time. Yeah, like Nick said, at Trade Like a Tiger on YouTube. You guys can find me over there. I do believe I'll be back on later in the week on Friday as well. So, yeah, there you go. Have a good one, guys. Talk to you later.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. How are we doing today? Let's go ahead and talk markets here. So we have the dollar index, something I'm eyeing here. So quick update before I go into that. Let me go ahead and go on the daily time frame here. Euro dollar position I had in yesterday. I took my profit as we were nearing here that 61.8% retracement level. And we got some interesting things come out. So if we go to financial juice, if I can find it here, let's see. Let's type in BLS. Yeah, so January employment report. So NFP basically won't be coming out on Friday, right? And that was essentially the basis for my patience for, you know, repivoting from the euro dollar into going like against the dollar, going via Aussie dollar longs. Excuse me. So I was waiting on NFP. We're not going to get NFP. Maybe, you know, who knows if the government shutdown is going to be somewhat prolonged, but nonetheless, somewhat of a partial data blackout here for the US. So what I did was I actually took my profits here. Like I said, I was at the 61.8, and then I repivoted into the Aussie dollar. Same thing that I did, right? So I did an initial half position. So right now I have a position here at the 38.2, and I'm very much willing to go ahead and pick it up here at the 61.8 if price goes ahead and fills me there. And then I'll ultimately be, you know, one whole lot into the position, and then my average price will be here at the 50. But what ended up happening was AUD or the RBA went ahead and hiked the rates as expected. And they were kind of warning of some persistent sticky inflation ahead. And so markets are pricing in one more rate cut in there. So we saw Aussie dollar initially up 1%. So the trade is, you know, actually, you know, doing pretty well at the moment. It's giving some back here. Again, I'm willing to go ahead and open it at the 61.8 if we do, you know, have an opportunity to get there. But if not, it's fine. I have half a position running in, and my ultimate profit target will be that 71.50 level. And if I go to the weekly time frame here, you can kind of see that as well. So weekly time frame, this was a good level of support. Once right here, twice here. Like if you just look left, you can see a lot of good characteristics of strong resistance. Then we broke out, potentially now support as we're bouncing off between these levels here. And then ultimately the next level where I think price can stall at would be that 71.50, which is right around here. So price will, you know, somewhere around here, here. So essentially I'm looking to go ahead and play, you know, the trade within this channel here. So pretty good trade. I'm happy about it. You know, in hindsight, would I have loved to get a full position on? Sure. But again, there's still a lot of opportunity for the dollar to get some strength. And so that's why, you know, I'm glad that I got the 0.5%, but I'm also kind of like, But, you know, if you get some persistent data blackouts out of the US, things don't look good. Maybe you get a little bit more of that, like, scary trade in the US sell America, a little bit lack of confidence, whatever the case may be, then perhaps that'll work out to my benefit. But looking at the dollar index here, we're approaching a strong level, in my opinion, right? Technicals are subjective to the individual, but I think 70 or the 98 handle here on the dollar index is pretty well. What support here once, here again, right? So we're approaching this level. The question is, does it continue higher or does it fade off from here? Right. Initially, the basis for my euro dollar short was I wanted to cash that dollar strength up into this level. We're pretty much there. And ideally, I was going to wait till after the NFP report to see, you know, if the employment or the jobs market in the US is actually improving. That'll actually, you know, lift off the dollar, and perhaps this level just fails to hold and we go higher from there. But now with the NFP not coming out, JOLTS or something was supposed to come out today as well. So now we're seeing that. And so maybe this is going to be a pretty solid level of resistance. So that's kind of what I'm eyeing here. Now, what kind of gives me that hesitation from a technical perspective, if we go to the weekly time frame here, this looks pretty solid, like this closure. If you just look at this right here, let me illustrate this. If you look at this right here, this like, this candle, and then we lift it higher, showing some parallels to this candle here with a stronger body. So maybe this was a kind of fake out situation, maybe not. I don't put too much emphasis on technicals, but obviously when they're very obvious on higher time frames, like maybe the weekly, then it's something worth considering. But for now, I'm gonna stick to my gut and say this level of 98 could be a strong level where bears have an opportunity to go ahead and short this thing. And if we put a Fibonacci, I'm curious to know if this resembles anything. Yeah. So the 98 is pretty much at the 61.8% retracement level. So it's the last line of defense for bears to take it over if they do. So that's kind of what I'm eyeing there. As far as the Aussie dollar goes, if we go to the edge finder, let's just verify that the top setup still shows that it's doing good. Give me a sec. Yeah, Aussie dollar still getting a bullish reading, which is something I love to see. And I think Tyler Berry did mention this, right? But interesting complex going on when it comes to the relationship between the Aussie and the dollar. I think he mentioned that the carry trade did flip. If I'm not mistaken, that should be correct. Let me type this AD USD. Yeah, look at that. So it's not the biggest, right? Aussie dollars slightly above 3.85 and then 3.75. So you're getting a 10 basis points, positive direction. Now you have to consider as well, you don't always collect the raw between the two, right? Depending on your brokerage, if you're with a US regulated brokerage, most likely the playing field is pretty even, pretty competitive. So they do mark up like it's called an admin fee or something like that. Depending on the brokers, they'll call it something, but it's essentially a markup that they charge to the carry for holding that rate. So still slightly in the red, but depending on your brokerage, you should be still not getting a very what should call it? You're not paying heavy swaps, which is fantastic to see. So you're actually for the first time getting a positive carry direction going in favor of the Aussie dollar. So that's something that I love to see as well. So I'm going to be playing this. I'm looking to, pick up the other one here at the 61.8 within this level, right? But if we start to break below here, then obviously this is more of a long-term flip. And then by then the dollar will be catching some steam ahead. So, but I like it. I mean, Aussie dollar does look a little bit extended here, but we've gotten here in the past before, even from these lows in 2022 October. We made ourselves all the way up here. So it's definitely possible. And we were almost there last week, right? So last week, we pretty much almost got to that 715. We stalled out. Fine. And looks like we're going to fill that candle as well. So we'll see how that plays out. I went by pound dollar at the 61.8 retracement level. Yeah, I mean, pound dollars is for the most part has been turning around as well as far as their growth. That was one of the things I struggle with. Now, as far as how aggressive you want to be with the pound dollar, right? Let's go to the weekly time frame. If you want to look at like this recent leg here, the 61.8% retracement level that you're talking about is some levels away. That would be ideal as well. But if we just consider the more recent one, maybe on a micro structure, so this will look on the daily time frame, this will look like so, like this. We're pretty close. Now, the thing with the pound is it moves pretty aggressive, right? So when it has the momentum, it will really show that momentum. So don't know if we're going to get all the way down to the 61.8% retracement level. That would mean that the dollar really shoots up. So something to consider there, maybe a more aggressive approach. I really like this level here. It kind of lines up with the 61, but maybe something like this. Let's see. Rectangle. Something like this looks okay. I mean, yeah, that's pretty much the 61.8. I mean, maybe we get there. But that's a good trade. And if we go to the top setups, I did see that earlier, but just want to confirm. Yeah, it's getting a neutral reading. I think COT was actually buying the pound, if I'm not mistaken. Pretty flat change, 1.74. I wouldn't count it as good or bad. but the net position on the pound still negative, minus 16,000 short contracts. But from a technical perspective, if you're able to get that 61.8% retracement level, I think that's a pretty good discount. As long as the fundamentals are still aligned with that, definitely go ahead and take that. I would like that trade for myself as well. Someone mentioned, why is the Nasdaq falling 1%? I don't know. Let's see. Let's see if Financial Juice shows me anything. Equity markets push higher. Is a large account for double to expand? No, that's bullish. Any comments? No major comments that I can see. I'm not going to look at this the whole time. So, U.S. plans to issue a license for to pump Venezuela oil. That's going to be good for your American oil companies. So, Exxon, Conoco. Let's see if they react to anything. Let's go to Exxon. I mean, they're already trading higher. Anyway, no need to go ahead and look at that. If someone can see something that I'm missing here as far as why the Nasdaq's dropping 1%, it seems pretty isolated at the moment. So Nasdaq being the biggest leader, so maybe there was something within tech, but I don't see anything on my side. Hey, Bashi, how you doing? Bad earnings today? Most likely. I will say, though, don't follow the noise sometimes, right? What I would recommend always is to follow the hard data, and that's why we have the tools at our disposal. So things like the Edge Finder, right? If you're trading currencies, commodities, indexes, all that good stuff. And if your flavor is more towards the individual stocks, right? Options, all that good stuff, you do have the stock box as well to go ahead and partake with. So, I mean, definitely go ahead and join the Edge Finder, join the Telegram channel. I'll put the link here in the description as well. So you guys can join. Free value all the time. Someone asked, why no news today? Well, we have a partial government shutdown, and so some of the data points or some of the data releases are starting to kind of stall here. So I'll go ahead and, if you just type in BLS on Financial Juice, they won't be releasing the jobs report on Friday. And I think also JOLTS was redacted as well today, which is why we're seeing some quietness there. So that's kind of why I think that 98 handle will probably hold on the dollar. If you still kind of see that theme of another government shutdown, that's always going to ignite more less confidence in the US, right? And so maybe that Aussie dollar position that I have can go ahead and play out a little bit, but we'll go ahead and see. Again, I'm willing to pick up some more at the 61.8 and then take it higher. So we'll see how that plays out. Bashi's dropping some comments here for some context. The government shutdown again. I say partially. It's up to the Senate. They're passing things, but if things become prolonged, things stall out, then of course the government can shut down. What's up, Marco?
Hello.
How are you, man?
Doing pretty good. How are you?
Pretty good as well. I'm finally in the Aussie dollar.
You are? Awesome.
Finally,
awesome.
Yeah.
Awesome. So from which level?
31.8. Right here, 69331.
Okay.
38.2.
Cool.
So
cool. Mm-hmm.
One of my dilemmas was I'm not as aggressive as I probably should be on the Aussie dollar just because it just continues running up.
Mm-hmm.
So I was somewhat creative in the sense that I wanted to pick up like half of a position size at the 38.2. And then if price goes against me, then I can essentially have another order at that 61.8% retracement level. That way I'm filled in for a full position. And that'll just, benefit my cost basis and give me a better fill price. But obviously, like, it gives me the participation of being in early, but also the acceptance of maybe I pick up a little bit more if it goes against me. And then obviously the stop will be below that.
Cool. I'm looking at the 20 MA on the daily chart to get in.
Okay.
So it still has not reached my personal level, but I know that we had a hot CPI print and we had a rate hike from the RBA. I haven't done a lot of research into the event, so I don't know about their forward guidance, but I still do like the Aussie dollar because the RBA is the only central bank that's actually looking to raise rates. Most of the other banks are either neutral or cutting rates, like, for example, the Fed. we should have, I think, 2 rate cuts of 25 basis points.
Yes, so they did warn, like the forward guidance was somewhat similar, like nothing really much new. The only thing that was pretty much new was that they were kind of warning of some sticky inflation still being persistent despite the rate hike. And so markets were pricing in like another rate cut or another rate hike, I'm sorry. And the Aussie yields did catch a little bit of a flare up here, but now things are stalling out. So the initial move was actually pretty well. Aussie dollar was up 1%, but now it's kind of giving back some steam there. So it wasn't like the craziest hawkish guidance, but they did say like, we're going to go ahead and proceed with our original stance of just hiking rates a little bit, maybe one more time.
Cool. That's awesome news. So yeah, definitely congrats on getting in. Hopefully, I mean, it would be bad for your position, but I would like to see a bit of a lower level for me to try and get in. I'm going to show it now. I forgot to share my screen before. But yeah, just if the 20 EMA catches up to the price a bit, and then I can get in. I have an alert set, so we will see what will happen with that. Other than the Aussie dollar, what else do you have on your watch list as far as the currencies goes?
So I had a euro dollar position short, and this was a position I took before the FOMC last week. And the basis for that was because I thought Powell was going to take a neutral to hawkish stance for many reasons. I mean, we have that sticky inflation, but then we also have the Fed independence being challenged. So I thought he was going to take more of that macho stance against, if you will. So we didn't get much of that. So any question about like, his term and things like that, transitions, all that good stuff, were pretty much shut down. So it was a neutral outcome nonetheless, but we did see that dollar resurgence come out after that Fed wash pick. So it was good. I was targeting the 61.8% retracement level for profit taking. I got out a little bit premature. So like literally at the bottom, right now we're seeing a little bit of a bump, but what kind of gives me the idea that maybe dollar gains can go ahead and persist is on a technical perspective. You do have this 98 handle here as a level of resistance that I think could hold. But if you look at the weekly time frame on the dollar, like from a technical perspective, like this looks pretty well as far as like a fake out rebound type situation here, these two candles. So we'll see. Obviously the fundamentals override the technicals for the most part, but something to always consider. But given that we do have that government shutdown, the risk of it prolonging, and also the jobs market information being redacted and or withhold, like I think we had JOLTS today as well. That's not coming out. So maybe if that continues, then we get another flash of like no confidence in the US, sell America, something like that. Maybe a lighter version of it, but nonetheless something like that. And that can go ahead and have this 98 hand hold a little bit. What do you think?
I do think we have found short-term support. I didn't think we were going to hit 95, but we eventually did. So that was pretty crazy to see. I don't really have a bias, bullish or bearish, on the dollar. I mean, I would love to buy the Aussie dollar, but as far as the DXY goes, I'm not exactly sure. I know we have Trump coming out and nominating Warsh, but that has still not been confirmed. So the Senate, I believe, still needs to approve Warsh for him to actually replace Powell. And I'm not sure if Warsh is just playing dovish to get picked for the Fed chair, and then once he is in, he will flip to hawkish. So I'm not exactly sure how that is going to go, and I don't really have any clarity on the DXY. Fundamentally, the numbers are good. Like the numbers in the US still seem pretty healthy. So I don't see a reason for this massive drop. And of course, the reason wasn't really fundamental. It was more of a loss of confidence. But now with Warsh stepping in and with a bit of less uncertainty, I think this could catch a small bid, like a short-term bid higher on the DXY. But I'm not expecting a massive move.
Yeah, if anything, I think we just hang out in the same range that we've been playing in for the betterment of 2025, which was this right here, right? So if I just remove this 98 one, this is essentially the playing field for all of last year, which was this trade. So I mean, if you were able to get a buy position on the dollar index with this fake out, you have a fantastic risk reward setup here. But yeah, I think that's also probable too. So my thing is like if that 98 handle fails to hold as resistance, then yeah, we're just most likely the next level would be this channel that we've been in. And from my understanding too, like Fed wash, inflation hawk, we have high inflation in the US. He's taking a more creative approach when it comes to forward guidance and monetary policy. Like he wants to kind of steer away from old methods, back looking data, and go more like forward looking stuff and things like that. So I'm curious to see how the market dissects that. And if, like you said, Senate still has to pass that. So if he does come into play, how's that going to be digested? What are you thinking of crypto, or not cryptos? I mean, crypto, we can talk about cryptos too, but gold and silver, my thought process is like, maybe, I think the question on everyone's mind is, do you buy or sell gold or silver? Like, is it going to shoot up again or shoot down lower? I think it's neither. I think we just hang out in a range, in my opinion. Like, I think that's the most probable outcome right now, at least, unless we get another flare up of geopolitical uncertainties and stuff like that, because you have US and Iran and supposedly Ukraine, Russia, and all these other things, right? Like, there's talks, but there's no resolutions yet. So obviously that's still up in the air. Do you have like a trade setup? Because I know like we got into this, very, very good level of support. Like, this was something that I was eyeing, right? Like this 4,400 handle. And if you just put some moving averages on there, this is the 50-day on gold. This is the 50-day on silver. Like, it seems like they bounce perfectly on there. Maybe you can give me more clarity on how to approach this.
So I'm definitely focusing on gold. And I do think this is a really nice level, as you mentioned. So if we flip to gold, we had the massive sell-off. I believe a lot of weak hands were shaken out. And now we had that rejection. So we had the blue candle on the daily chart. And we are around the 20 MA on the daily, which is a sort of a perfect level for me to get in. The only thing that I'm searching for is a bullish reading on gold. So right now it's neutral, which is a problem, because they definitely want to go in line with the edge finder, especially because the edge finder has a really, really good success rate on gold.
It does. It does.
Yeah. So I want to get that confluence. Until I get it, I'm not sure I would be super happy to get in. So technical analysis here looks really good. The level is great. I just need the edge finder to be in line with the position. And for silver, your question may be, why am I avoiding silver? That is because silver, I think, has gone crazy parabolic. And this correction was massive, and it's just extremely volatile, and it's below the 20 MA. And from my back testing, I have found that silver, when it has a rockstar year, usually the next year is break even or negative. Gold, not so much. Gold tends to just appreciate over time, steadily appreciate, because it's a purely an investment asset. Silver has some issues. If it makes more than 100% in 1 year, usually the following year is not so great performance-wise. But so if we do get a bullish reading on the edge finder, would you consider getting in gold, or are you sticking to currencies for now?
I think I would. If the prices are relatively cheap, like on a technical perspective, I think I would. If you, for some odd reason, if you were to get gold at the 200-day moving average, I think that will be like a fantastic, solid level to go ahead and enter. But maybe for a short-term play, maybe I would like to see a strong edge finder reading, of course, but then also some very strong narratives, as far as like there's got to be some kind of a flare up, some tensions going on, and not short-lived ones either, like something that has prolonged. That way I can swing trade it and ultimately let the trade play out, even if I'm wrong on the entry for a little bit. Let the thing ride out for the longer term. But if it's like a quick hit, I don't think I would participate. I think I'd consider within the currency world, but yeah, something to consider. And like you said, with silver and gold too, I'm sure. But like, if you look at from a technical perspective, like we haven't yet reached the 50-day or the 61.8 retracement levels for the bears, right? So that's still a level that they can go ahead and target, to go ahead and take this lower. And if I remember correctly, like silver was very much reactive during this initial run up. You had this like solid red candle. It looked very well from a technical perspective. Like you can't argue that this was like, maybe a good short opportunity. And then it just kind of just went right back up. And I think this could happen on a bigger scale as well. So maybe silver has this flash red candle. Maybe we poke up a little bit, but still it'll happen, but just on a, like I said, on a bigger scale. So that's kind of the worry on the metals here. What about Bitcoin, man? One thing I've been looking at Bitcoin was that 70,000 handle, or like this level right here in general. Seems like we're there. Do you think this is a good buying opportunity? I'm not too familiar with like the crypto space. Like I know a lot of the fundamentals that affect the US, like global macro, does affect it, like as far as risk on, risk off. Obviously, like carry trades and arbitrage and stuff like that. But like macro specific or fundamental specific things to cryptos, I'm not too well versed in it. Do you think this is a strong level of support, like a good buying opportunity, or you think there's a lot of risk to the downside?
That's a good question as far as Bitcoin goes. I think right now we are in the crypto winter. So I think it's not a great case for Bitcoin. I think the fundamentals don't seem bullish. There's a lack of narrative, which is the main issue. So it used to be that Bitcoin was this cool thing that people in the shadow zone, and it's used for illegal stuff, and only the crypto, the crypto nerds have it. So it used to be something cool, but now every single institution is pretty much involved in some sort of a Bitcoin investment. So it's no longer the cool thing. Use case, maybe you can say it's still great for sending money abroad, for actual like replacing of bank transfers. But again, bank transfers recently, in my experience, have gotten cheaper and faster as well. They've kind of caught up with Bitcoin. So I would say if we don't go above 100K, it's going to be a crypto winter. And also we have the halving cycle, which is a 4-year occurrence in crypto. For anyone that's interested, just ask Google Gemini or ChatGPT, what is the Bitcoin halving cycle? Basically, we are now in the bearish part of the halving cycle until the November of 2026.
Oh, wow.
So yeah, that's kind of a massive reason for me to be a bear. But I'm not looking to sell. It doesn't really fit my plan to sell. I'm only looking for buy setups, especially because this thing long term definitely is going higher. But I'm of course not looking to buy at these levels. And as far as corrections go, if I look at the previous price action, I mean the pullbacks, the corrections, they can be absolutely massive. So like 70, 80%, it can happen. And so far, I think we have possibly even just started. This doesn't seem so big. And have you been looking at MSTR, MicroStrategy?
So that's what I was gonna say, Marco, was like from a technical standpoint, like I'm looking at this level of support, just for like looking at the chart, not even considering anything else, but like it looks good. And I was gonna ask you two things, like, do you have a price where you think a good discount where you can buy at, but also too, like this level here, and I'm gonna go ahead and go to the silver chart or the gold chart first. Lots of reasons why gold and silver plummeted. One was dollar strength, other was like the Fed wars, right? Geopolitical, a little bit of cooling off there. But another big thing was CME margin requirements were raised, right? And so that causes a lot of forced liquidations. I'm curious to know if that same idea or that same price action or the same characteristics were to happen, if you're getting that same thing, but with bigger players in Bitcoin. Like you have Michael Saylor's MicroStrategy or strategy, they have their average cost basis at 76,000. So if they start going in the red, do you get money like investors pulling out? Do you have some sort of a broader, heavier unwind that's forced that's going to ultimately propel Bitcoin lower if this level doesn't hold? But I'd like to hear your thoughts on MicroStrategy as you were about to talk about that. Like, do you have any opinions on that, or how they plan to navigate that? I haven't really been seeing much as far as what Michael Saylor's been saying, but I'm curious to know what your thoughts are.
Yeah, I think that's a super interesting topic. But also one more reason why I'm bearish Bitcoin at the moment, there is actually a bearish narrative with quantum computing, where a lot of people expect or believe that once quantum computing develops even more, that they're going to be able to steal Bitcoins and basically kind of hack the whole blockchain. So that's sort of also the narrative that's been floating around Twitter, let's say. So that's definitely not bullish. But as far as Michael Saylor goes and MicroStrategy, super interesting company. Just a second.
Sure.
I had to decline a call. Just 1 second that I write the message to my mom.
That's important. That's important. Mom's important. Wait.
So, MicroStrategy, really, really interesting company. Michael Saylor, interesting guy, but I think the whole thing is a big scam, if you ask me, because he was selling Bitcoins at a massive premium to MicroStrategy investors. If you look at how the company is structured. Now, the reason why people were actually buying MicroStrategy is because the barrier to entry, the barrier to buy was extremely low. It is just another stock. While with Bitcoin ETFs and with different products with Bitcoin, if you don't want to go to Coinbase, and if you have, let's say, millions and millions of dollars, you can't really just go to Coinbase. You have to do some sort of an institutional play. The other roads were kind of more expensive or more complicated or with less liquidity. So MicroStrategy was the perfect vehicle to get into Bitcoin in the most simple process, if that makes sense. Yes, you pay the premium, but you still own some Bitcoin and you can sell it at any time with a push of a button. And even for smaller investors, even I think maybe some pension funds have it in their portfolios as well. So I would kind of expect maybe because pension funds, I think they can't buy crypto, but maybe they can buy MicroStrategy. Not sure.
Gotcha.
Anyway,
okay.
Yeah, apparently Michael Saylor's entry price for Bitcoin is right around, I think you mentioned 77K, something like that.
76 from what I understand, yeah.
76. So if Bitcoin goes lower, MicroStrategy should keep dropping. STR. Now, I don't think anything is going to happen to Michael Saylor, but the investors in this company are going to get absolutely crushed. And they have been experiencing massive outperformance because Bitcoin was doing massive outperformance. Now it's time for the crypto winter, and I don't think this stock is going to do well. Could it have an impact on the price of Bitcoin? Maybe, possibly, because it could create an even more, let's say, an even more bearish narrative, if that makes sense. So if MicroStrategy blows up, I think people could get even more scared of buying Bitcoin.
That makes a lot of sense. I learned a lot today. I didn't know about the quantum vulnerabilities there. And from my understanding, face value of Bitcoin is like a lot of the appeal is that like safety net or kind of like, you know, it's not really touchable or controlled by anyone. So that's actually really interesting to hear. And I don't know about the halving cycle as well going into 2026. But Marco, I'll leave you for your solo segment, man. Thank you so much for talking Bitcoin and talking the other charts. Definitely go ahead and we'll see. I think tomorrow we're together again.
Tomorrow, I do believe okay. we are streaming together tomorrow. So thank you very much for doing this sort of dual segment. I'm looking forward to seeing you tomorrow as well. And I'm going to ask you about Google tomorrow because I think it's a pretty cool stock. So yeah, see you tomorrow and we'll talk about Google.
I'll do my homework on that, man. Take it easy, guys.
Yeah, sure. Bye. See you. Okay, now time for the solo segment. Before I start with the solo segment, I have a form for you because I have a free DNA funded challenge. So let me just get my links in order. Jot form. So in the comment section, you have a Jot form that you need to fill out. And once you fill it out, you will get entered into the DNA funded challenge giveaway. Okay, I'm going to copy all of your names. I'm going to put them in the wheel of names. I think I have the old wheel. Yeah, this was the old wheel. And then we basically spin and we see who wins the free challenge. I think this time it's going to be a 10K. Let me check. Let me check my documents. Yes. Okay. So 10K. If you're a winner, I'm going to send you the code after my segment. So basically, once my segment ends, I'll send you a personal email with the code and with all of the information that you need to know. Now, time for the charts. And also, by the way, I almost forgot, if you want to get funded with DNA, A1 Live, 25% off any DNA funded challenge. So A1 Live, 25% off. Make sure you use it. The thing I wanted to talk about is I have a position on the Nikkei. I have trailed my stops. If you're in the A1 Discord, you would get all of my trades and all of my levels. So I have trailed my stop loss at 52386. And basically, I'm looking for this to continue going higher. I would like to see the uptrend continue. I would like to just keep moving my stop loss below the lows and squeeze out as much percentage as I can. So just trailing the stop loss, nothing new. The stock that I wanted to comment on was Google. So GOOG, Alphabet. Google looks pretty bullish, and it definitely looks a lot better than the NASDAQ. So the NASDAQ seems to be actually pretty bearish, if you ask me. So, I mean, from the 30th of October, we didn't really have much movement, and now we are going lower. But Google has been steadily outperforming the market. I do believe it is because ChatGPT OpenAI is losing market share to Google Gemini. Google Gemini is expanding, so Google Gemini is getting more and more clients, kind of taking them away from ChatGPT. And this is a very bullish story for Google as well, because at the moment, in my opinion, from the research I've been doing, Google should be the main candidate for the AI race, the main winner of the AI race. I do believe ChatGPT still has a huge client base, but again, Gemini is better and is starting to take away clients. This is great for the stock. If we get a pullback, maybe a good opportunity to get in. I mean, we have just been crushing higher from the 29th of April. Is anyone in Google? You can put it in the comment section. So if you have a trade on Google or you're looking to buy it, definitely let me know. I'm interested if this is something that's kind of out there or maybe not on the radar. But technical analysis here seems great, very bullish, respecting that 20 MA. So I love it. Hello, Sluggy. Hello, Abby. Google never pulls back. Well, I don't need a massive pullback. I only need the price to pull back to the 20 MA. And, you know, every few weeks we do have a pullback. So, for example, here, 10th of October, 14th of November, 17th December, 7th of Jan, and then again, the 21st of Jan. So we're getting those pullbacks, at least a little bit. Let me set an alert here. Let's see. If we do catch an alert, I may take a stab on this. I'm not going to put it on the watch list just yet. So Nikkei is a position that I'm in. Aussie dollar, I would love to be in. Unfortunately, I didn't get in. I was basically waiting for a lower level. So congrats to Alan for catching this. I would definitely love to see the price pull back a bit more, get close to the 20 MA, get close to that. Let me see the fib levels. Maybe 0.5. I don't even need 618. I just need, let's say, 0.5. I think that would work. That would definitely work for me. As far as support levels go, okay, we do have this pretty important high that now acts as a support, which is interesting. So Aussie dollar, want to buy it. The score, has that changed? The AUD, USD. Bullish reading on Aussie dollar. What about the pound Aussie? Neutral reading right there. So pound Aussie. Yeah, I'm gonna remove this one. Just I think most of the move has already happened. So for now, I'm just gonna remove it and ignore it at the moment. But if you have been watching the RBA, Central Bank of Australia, you would know that they are hawkish. They have recently raised the interest rates. That is bullish for the currency. They're kind of the only central bank raising rates at the moment. Maybe New Zealand dollar as well, NZD, USD, RBNZ. Yeah, this looks really bullish as well. Although I'm not sure when the next RBNZ meeting will be. So I'm going to have to look into that. But if I just jump onto the Forex Factory calendar, there is the Aussie cash rate, forecast 3.85, actual number 3.85. So previous number 3.6, which means they are starting to hike the interest rate. If we also go to macro scanners, real yield history, or the carry trade scanner. Where's the yield? No, not this one. Let me see. Okay, I forgot where the yield is. I'm gonna find it after the stream. Is it here? No. Is it under interest rates? Interest rates? No. Okay. So free things on my watch list. Gold as well. I would love to get an edge finder confirmation, and that's exactly what I'm waiting for. So if we go to top setups, if we look at gold, gold has been unfortunately losing its reading lately. So we're getting a neutral reading at the moment. Let me see the history right here. As you can see, the last bullish print was on Jan 14th, which is okay. What about silver? Silver, January 22nd was the last bullish print. Okay, fine. So the technical analysis is fine. As I mentioned during my segment with Alan, the technicals on this one are fine. We are above the 20 MA. We have had the rejection on the daily chart. This is kind of exactly what I was looking for. But I need the edge finder confirmation. Otherwise, I won't be interested to get in. Yes, there is still a fear of this dropping. There's still a fear of a big drop lower. So maybe the edge finder is neutral for a reason. Maybe we actually do get a bigger pullback, but I think most of the weak hands have been shaken out with this move, especially so on silver. I mean, the move on silver was absolutely crazy. Crazy move on silver, one of the biggest moves I have witnessed in the markets. I think actually the biggest move I have witnessed in the last 5 years. Okay. So now, let me see. I'm going to put the form link one more time. I'm going to give you 2 more minutes to get in. So in the comment section, you have a JOT form. Fill it out, and you will enter into a giveaway. So let me see how many emails we have, how many entries we have for today. Today is the 3rd of February. Okay. It's fine. That's about it for my watch list. Again, US stocks down on the day. Unfortunately, the Nikkei seems to be pulling back a bit. Russell up. US 30 up a little bit. DAX pulling back. Silver is up 10%, but in the grand scheme of things, it's nothing. Copper up, platinum up. If copper stabilizes a bit, I think it actually could be a nice bullish entry. I think it could be a nice buy setup. Has it lost the bullish reading? Probably. Neutral, and if we go to the history, let me see the last time we had a copper. So, okay, we haven't had a bullish reading in a while on copper, which is unfortunate. Fundamentally, I do like copper because copper is massively being used for solar panels. Right now, silver is the #1 metal being used in solar panel production, but it's slowly being replaced by copper. So as more and more manufacturing plants start using copper, guess what's going to happen with the demand? And guess what's going to happen with the price? It is, of course, going to go higher, especially so if silver goes up even more. So if silver starts being extremely expensive, these solar panel companies will rush to replace their tools for copper, right? Okay. So time for the giveaway. Let me grab all of the names from the 3rd of February. Copy. Paste in the wheel. Okay, that's it. Spin. So, Emily or Irina? Irina M. Let me just check if I have your information so that I can send you an email. So let's see. Yes, I have it. So after the live stream, after my segment, I'm going to send you an email and you're going to receive a free 10K one-phase DNA funded challenge. For those of you that didn't win but want to get funded with DNA, there is the code A1Live, 25% off any DNA funded challenge. Okay? I recently bought a new challenge for DNA, 25K. Where is it? It's here. So I had a 50K funded, lost it unfortunately, blew the account. Now 25K, phase 1, 25K right around at the moment. So I mean, equity is what, 24.87. In a bit of a drawdown, I have a buy setup on the S&P. By the way, these DNA challenges are purely traded by ChatGPT. It is a series that I'm doing for my personal YouTube channel. So far, ChatGPT passed phase 1, passed phase 2 on a 50K, blew the funded. But now I bought a 25K, so we're going to see what happens. Again, great prop firm, great price as well with the A1 Live code. And behind this prop firm is a big broker, so you know that they're going to be here for the next 5 to 10 years, right? It's not the prop firm that's here for 3 months, takes your challenge fee, and then runs away. It's a real serious company that's going to be here for the long term. And personally, I've had a great experience trading with them so far. Didn't get a payout, but I didn't have any issues so far. We'll update you on the situation and we'll update you on my journey. If you want to get a free challenge, make sure you tune into my segments because I have a lot more codes to give away. So 1 code per stream, and I stream 5 days per week. You can find my full schedule right here. Let's see. A1 live stream schedule. So tomorrow I'm on at 9, Thursday at 10. So we don't have a joint segment tomorrow, unfortunately, but that's okay. And on Friday, I'm on at 10. That is Eastern Standard Time. So let's continue with the program. Crypto, I pretty much mentioned everything about crypto. I don't wish, but this looks bearish to me. It doesn't fit my plan to sell, but I think there is an opportunity to get in on a sell setup here. There's a definite lack of narrative. Most of the confluences are pointing bearish. Again, Bitcoin is no longer cool. Institutions are in it. Quantum computing, people see that as an issue for Bitcoin. And just the sort of the narrative online is not bullish. It's kind of bearish. So unless we can go back above 100 100K, unless we go back above 100K, I think we're just going to be in this crypto winter. Once November passes, once the sort of the bearish part of the halving cycle passes, and we get some bullish price action, it's going to be game on for me to look for setups. So I'm looking for the 11th of November, or sorry, the November of 2026 to pass. Or if we can climb back above 100K, which I don't personally think it's going to be possible. What I'm super interested to see is how MSTR plays out. So what does MicroStrategy do? Because right now they seem to be very much under water. Like the stock price from the highs, let me just see from the highs, just for fun, 74.6%. Yeah, that's pretty bad. It's pretty bad. If you want to calculate the sort of the current real value of MSTR, just take the number of shares that are out there. I think it's shares outstanding, and multiply that or compare it. So they publish exactly how many Bitcoins they have. You need to multiply the number of Bitcoins with the price of Bitcoin. And then you compare that to the price times the shares outstanding. And then you see what is the fair price of MSTR. It's not really that simple, but it should kind of give you a rough idea of how much they actually have and what is the price relative to the price. What is the price of their stock relative to the price of Bitcoin? There's also an amazing article by, I think the name is Andrew Campbell. Andrew Campbell, I think that's the name. So he made a 10-page or 15-page article about MicroStrategy and exactly how they structure the whole company and why the whole thing is pretty much kind of a Ponzi scheme, a scam. Definitely a bit shady, and definitely somewhere in the gray area of regulation. So time for the comments. I still have around 5 minutes more from my section, so let me see if you guys have any requests. US plans to issue a license for companies to pump Venezuelan oil. Well, if the supply goes up, the price of oil should go lower. If Venezuela goes online, the price of oil should go lower. But again, for that to happen, it's going to take, I would say, years to build an infrastructure for pumping out oil on Venezuelan territory. It's going to take a really, really long time. How was the RBA growth forecast? I'm going to have to look into that. I didn't do much research, if I'm being honest. No forward guidance from the RBA, but they did not rule out hiking 2 times in 26. That's good. That is definitely great to see. It's a great reason to buy the Aussie dollar. So that makes me even more bullish. If it's true, of course. Quantum fear is in the past. COT priced. Influence. Michael is not smart. Trust me, Michael Saylor is extremely smart, but shady. If MicroStrategy goes to zero, Michael Saylor will still have millions and millions of dollars. Just his investors will get burned a lot. So he's super smart, but he just kind of doesn't care about his investors. That's usually what the big crypto guys do, the ones that are involved in semi-scams, as I would personally call it. I like that Gemini is easily integrated into the normal Google searches. I do like that as well. I've been a big user of ChatGPT. I use it for the funded challenge. So I use purely ChatGPT to execute positions on this account right here, on this DNA account. But for my personal use, for my personal research, I've started to use Google Gemini, and it's faster, better, more efficient, and better integrated with other stuff that I'm using from Google, I would say. Google holder from 130, really? Let's see. 130, okay, well, looks like it's a pretty long-term hold, but Google just, it's amazing. And people want to participate. So Google at the moment is the leader in AI. Google Gemini is absolutely the best LLM tool, right? So it makes sense for the price of Google to keep appreciating higher. And I kind of want to get in. I mean, fundamentals are bullish. It is the best performer so far. It caught up to ChatGPT and past ChatGPT. Price action, very clean. Around the 20 MA, if we get an entry, I think it's good. And people from all over the world, as I mentioned, they want to get into the AI game. The best way to get into the AI space is to go with either the NAS, which doesn't look so great. The NAS definitely is not performing well, but if you really want to get into the AI race, you can buy Google. It's an option, and people are definitely buying it. Marco, I think Aussie CAD has gone under the radar. It's not been running away as much as Aussie dollar, thus giving some opportunities to buy. Interesting. Let's take a look. Aussie CAD, you might be correct, although I would still say this is a pretty big move. What does the Edge Finder say? Top setups, AUD CAD. A bullish reading on the Edge Finder. I mean, it's gone up. It's gone up. Maybe not as much as the Aussie dollar in terms of this move, but still, Aussie CAD has definitely appreciated. But again, a fine currency pair to look for buy setups. I would not mind buying Aussie CAD. The reason I personally prefer Aussie dollar is because of the interest rate divergence, the central bank divergence. So the Fed plans to cut interest rates. RBA, they're planning to hike rates. That creates a perfect storm for the Aussie dollar to follow the interest rate differential, thus appreciating higher. So that's why my personal pick is Aussie dollar. But if you have an edge on Aussie CAD, it looks good. Edge Finder is bullish as well. So I think it's pretty good. I have a problem filling out the form. I haven't done it twice. Well, you shouldn't have any issues with the form. We checked it multiple times. It seems to be working really well. The only issue that you could have is you can't submit the same email. So I believe you cannot go in with the same email. You can only use one email, and that's it. I think that's how Nick structured it. So Nick created the form. So I'm not exactly sure about the email parameters, but from what I can see in the comments is one submission per email is how he set it up. Could I see the Aussie heat map? Yeah, sure. Aussie heat map. So we go to the heat map. AU. This is it. It looks okay. It's not super bullish, but 66.6% is fine. So this means that 66.6% of data is coming out better than expected. So it's coming out bullish for the Australian dollar. Okay. So that's about it. We have reached the end. Quick summary. Just for those of you that joined recently, I'm in the Nikkei. This was a signal in the A1 Discord. You can join the A1 Discord with the code Marco and get a nice discount. Aussie dollar is bullish. I'm looking for a pullback to the 20 MA. Gold, technical analysis looks great. I'm looking for the Edge Finder to give me a bullish reading, and then it's game on for me to get in on a buy setup. That's about it. I will see you tomorrow, and I have more DNA codes to give away. So good luck in the markets, and talk soon. See you.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.